You are the CEO of your finance. So have the focus on investing in projects that can produce. Hello everyone, welcome back. As a real estate investor with over 20 years of experience, I have accumulated a wealth of knowledge and skills that have helped me to invest in real estate like a pro. And I am still learning about this business regularly. In this video, I will share with you the top 10 principles that I have learned along the way that can help you to invest in real estate successfully and achieve financial independence. If this is your first time visiting my channel, please subscribe and turn on the notification bell. My name is Korianne. I am a real estate investor since 2001. I make videos to share my real estate investment journey that got me to be financial independence after 8 years of investing in cash flow properties. Hope to inspire you to invest in cash flow real estate so you too can achieve financial independence, build a legacy, and make an impact on people around you. Principle number 1 is educate yourself. The first step to investing in real estate like a pro is to educate yourself. You need to learn as much as possible about real estate market, different type of properties, and investment strategies. You can read book, attend seminar, and network with professionals in the industry to gain more knowledge about the real estate market. It may take you a few months to pick one real estate strategy that serves your needs. You only need to master one strategy at a time. I took a few months to get educated about many real estate strategies and then pick one that serves my investment objective. I went all in with the buy and hold real estate strategy. Principle number 2, set clear goals. You need to determine your investment goals such as cash flow, capital appreciation, or long-term wealth building. You also need to define your investment criteria such as location, property type, and investment amount. Having a clear goal helps you to focus to invest in projects that serve you. I remember back when I set out to invest in 20 residential projects in 10 years period. I met my goals by investing in 28 projects instead during the 7 years period because setting goals gave me the focus to implement my objectives with a clear purpose. Principle number 3, conduct thoroughly research. You need to do your due diligence on any property you are consider buying. This includes analyzing market trends, reviewing property conditions and history, and estimating potential expenses and income. I cannot say enough about underwriting projects on a daily basis and watching the price changes based on certain economic adjustments, interest rates, population change, companies moving in or out of the city, price to rent ratio, and other important data may affect your investment in the years ahead. Understanding the foundation of the economic data would help you to determine when to invest, sell, and trim your position in those markets. Looking back at the year when the market crashed in 2008, I lost money in the Las Vegas market, but I was able to use the gain in the other 4 real estate markets to help me not only survive, but thrive during the market downturn from 2008 to 2012. Principle number 4, develop a solid team. You need to have a team of professionals to support your investment, such as real estate agent, property manager, accounting, CPA, and attorney. It is essential to select professionals with experience and expertise in the type of investment you are pursuing. Teamwork creates dream work. You want to have the best people who have high integrity and have your best interest at heart and tell you the truth even when things turn bad. You do not know everything, so having great specialized skills professionals will help you see things better than you. I have been investing in many different real estate markets in the last 22 years, and I credit my investment success to my local team who manage my project daily. Principle number 5, create a plan. Develop a business plan that outlines your investment strategies, financial projections, and risk management. Set clear timeline and performance metrics to track your progress. Each project should have a purpose to serve your investment objective. For example, one can be a growth project holding for 5 years, and another can be an income-producing project holding for 30 years. When you create a plan for each project, you can sell, hold, or exchange based on your plan with ease. Principle number 6, manage your cash flow. Track of your income and expenses and maintain a reserve fund for unexpected expenses or vacancy. Manage your debt and financing to optimize your returns. In some years, you may want to hold more cash reserve than in other years, like when we are in the economic downturn, and when you want to hold on to your project without a panic sale. Then you need to set aside cash reserve for the unexpected event, like your tenants cannot pay rent for 6 months and they could not move out because they have no reserve to move to a new place. You need to have cash reserve to pay for the mortgage payment while you will find the solution for the current issue with your tenants. Principle number 7, stay current. Stay informed on the latest market trends and regulatory changes that may impact your investment. An example of tax law change recently was the cost segregations and bonus depreciations, which I hope some of you have taken advantage of and realized the accelerated depreciations. Continue to educate yourself and adapt your strategy as needed. I like to assess the real estate market macro trend to determine whether I need to reallocate my asset to mitigate my investment risk. Principle number 8, network and build relationships. Network with other investors and industry professionals to learn from their experiences and identify potential investment opportunity. Build strong relationship with tenants and service providers who maintain a positive reputations and enhance your investment returns. In each real estate market that I have invested in, I do have a few local partners on whom I bounce my objectives or share local insight together. Principle number 9, monitor and evaluate your investment. Regularly monitor your investment performance and evaluate your result against your goals. Adjust as needed to optimize your returns and achieve your objectives. Principle number 10, stay focused on the long term. Last but not least, real estate investments require patience and a long-term focus. Avoid short-term speculations and focus on building a diversified and sustainable portfolio of real estate assets over time. You need to know what each project that you invest in, whether it's produce a growth or income or both. You are the CEO of your finance. So have the focus on investing in projects that can produce the outcomes that you set out before you invest your money in each project. That's all for today, and I hope you find these 10 principles helpful and are able to use them today to be a pro in real estate investing. If you like this content, please click the thumb up button and share this video with others. This helps my channel a lot with the YouTube algorithm. Thank you for watching. Let's learn, invest, and make an impact. Ciao!